Okay, problem 4, chapter 1. This brings together a lot of the things in module 6 through 9. Let's go through and identify the revenue and the expense accounts. I'm going to highlight the revenue in green. We have sales and rental revenue. And now I'm going to highlight the expenses in red. We have loss on sale of investment. We have cost of goods sold. We have loss on a write-down of inventory, selling expenses, general and admin, and administrative expenses. The one I didn't include, I'm going to highlight in blue. And I need to draw your attention to the very last part of that reminds you that the event is both unusual and infrequent. Hence, it's an extraordinary item. So, single step income statement. We're going to add together these. We're going to add together these. And we're going to make our single step, our one subtraction, to come up with net income. So, let's just go through and fill that in. Our sales revenue was $25,550. And our rental revenue is $84,000. So our total revenue and gains is $2,634,000. Now we're going to subtotal all of our expenses, and there's no real order here. $1,230,000 is our cost of goods sold. $340,000 is our selling expenses. Our general and admin is $170,000. Our interest expense is $83,000. Our loss on sale of investments, that's just ordinary income, okay, or lack thereof, $24,500. And our inventory from our loss on inventory write-down, again, that's normal, average, regular, ordinary expense, $240,000. So our total expenses and losses is $2,087,500. And now we go to the next part of our problem, where we do our subtraction. And our income before taxes and extraordinary item, $546,500. That subtraction is the single step. That's the single step in the single step income statement. Now we have our income tax, and we're told in our trial balance that our tax rate is 40%. And while we're there, let me draw your attention to the fact that we have 300,000 shares of common stock. We'll need both of those pieces of information soon. So our income tax expense is 40% of that. So 40% times 546,500 gives us 218,600. So our income before the extraordinary item is $327,900. I need you to pay special attention to that one, because we're going to need that for EPS when we get there, so we got to make sure we remember that one. Now, our extraordinary item, go back to our, where are we? Right here. $160,000. Now remember, $160,000 is the total, and extraordinary items are always considered net of tax. Okay, so our extraordinary item net of tax is what I forget the number already, sorry. 160,000 Now I would just take 60% of that, but you could take 40% and subtract it if you like. The after-tax loss on that is $96,000. And our net income is $231,900. And again, I'm going to call your attention to that because we're going to need those two numbers to come up with our earnings per share. So our earnings per share is the ordinary income, $327,900. So we take our $327,900 divided by the 300,000 shareholders we had, and we come up with $1.09 income earnings per share before the extraordinary item. Now we also need to take the extraordinary item and see how much of that goes to each person. And we divide that by 300. And we come up with 32 cents. So we had $1.09 income per share, and we had a 32-cent loss per share. So our net earnings per share is 77 cents. Another way you can check that is simply take the after income earnings per share, divide by 300,000, and you'll come up with the same number. So that's Chapter 4, Problem 1, a single-step income statement. Stand by for Part 2, a multi-step income statement.